this week I'm talking about how to prepare for tax season as a self-employed individual. A couple of weeks ago I talked about how to prepare for tax season as a whole, but now I need to focus in on all my self-employed individuals because it's so important for us all to understand what it means to be self-employed from a tax perspective. And again, a lot of people started maybe a side business or they started doing Uber or something along that line in 2020. So it is so important for us to understand how that affects us tax-wise. So stay tuned. I will be going through several different points that I want you to take into consideration. It's so important that you do because it could be the difference between owing a lot of money and reducing what you could have owed, or maybe allow you a refund, right? Okay. So with that being said, I am the CEO of Brown's Fulfillment Consulting and Accounting Firm, and we are located in Center City, Philadelphia, and we provide an array of services, of course, including tax preparation, planning, and advisory. And though we are in Philadelphia, don't worry, we can certainly provide services to wherever you are in any state. Okay. And if you do need to reach out to us, you can do so either on social media platforms, email, or hey, visit our website. And for social media, we're on Facebook, LinkedIn, Instagram, and Twitter at Browns with an S _FCA. And as per sending us an email, that's info@brownsfca.com. or our website, www.brownsfca.com. And again, we have a lot of useful tools on our website where you can use to help plan for tax season with document retention, right? So you can head on over to our website. It's all there. Pull it down, go by it, gather everything, and get your tax affairs in order, okay? All right, so before I dive into this week's topic, I want to go ahead and recap last week. So last week, I spoke about standard deduction and itemized deduction. Now, these are one thing that all U.S. residents have the option to choose which one they want to go with, right? However, but if you're a non-resident individual, you can only use the itemized deduction. So if you're using the standard deduction or the itemized deduction, it differs, okay? So let's break down the standard deduction just really quickly. So standard deduction is based on your filing status, your age, and your dependency. And there are 5 filing status. You have single, head of household, married filing joint, married filing separate, and qualifying widow or widower, okay? So each of these are awarded a different standard deduction amount. So if you're single, you are given $12,400. Now, if you're head of household, that's $18,650, right? And each of those, again, are all different. Married filing joint, you're $24,800. Now, if you look on the flip side of that, you have itemized deduction. Now, itemized deduction are expenses that you incurred in the prior year, at this point meaning 2020, that you were not reimbursed for, okay? And major categories that make up that itemized deduction include your charitable contribution, your mortgage interest that you paid on your loan, property taxes, real estate taxes, things along that line. Now, you definitely want to choose the one that's more beneficial for you. And that's oftentimes, depending on your situation, could be that standard deduction. So you want to definitely be aware, and as it pertains to tax planning, keep that in mind as you move forward, okay? All right, so don't forget, like, share, comment, and if you have any questions, drop it right there in the comment section. Shoot me over a message, send us an email. I always encourage questions so that you can better understand what it is that's going on. All right, so let's dive into this week. So preparing for taxes as a self-employed individual, it's more hands-on because a lot of it, you have to manually do some of those works if you have not yet automated it. So what I've done for this discussion is broken down the self-employed individuals in 2 categories. So Uber and Lyft, for some reason, they need their own category. And then you have your freelancers, independent contractors, and small business owners. They're all sitting over here. So first I'm going to start with all my Uber and Lyft individuals because they concern me the most because they often end up with a tax liability that they did not even imagine could ever be, especially if they've made a good amount through doing the shared driving. right? So the first thing you want to do with preparing is make sure that you obtain your Form 1099 NEC. Now, once you log on to your Lyft or Uber platform, you're able to pull that document from there. So that's the easy part of preparing, right? That form is right there. You don't have to worry about anything else. So once you pull your Form 1099 NEC, you have your income. Now we need to focus on your expenses, and that's where things get a little bit tricky. Now, as an Uber or Lyft driver, you can certainly go ahead and look at your platform on the app. It will tell you, well, what's all the fees that you've paid Uber or Lyft, right? All of those years, last year really, the mileage. You want to go ahead and capture those, because those will help you to reduce what you would pay really. You are now recognizing those taxable deductions. So all the fees that you've paid to the app or Uber or Lyft, the mileage that you've driven, good news, it's on Uber or Lyft, okay? And then aside from that, if you've incurred any parking or toll fees, you want to go ahead and obtain those as well. Gather all of those. And then if you're using your phone, come on, you're using your phone a majority of the time. So what you want to do is determine, well, am I using my phone 50% of the time, 90% of the time, which whatever amount that is, you're then able to write off a portion of the costs of your phone bill, right? And then lastly, if you're using your home for any home office activities along that line, you want to go ahead and keep that in mind as well. So that's just the Uber and Lyft individuals. And you cannot forget, if you had a meal while you were going to obtain someone or dropping someone off, if you had to get a meal while you're on the job, that is absolutely a tax write-off. But you want to make sure that you have proof, meaning, did you take a picture of it? How did you purchase it? Do you have that receipt to show proof? Okay. All right, so the next part to this is, again, all my freelancers, independent contractors, and small business owners. And some of the things from the Uber and Lyft will seem a little bit repetitive, but you have, again, your own ordeal of things to deal with. So first you want to go ahead and capture all your income. And that could mean, again, your 1099 NEC, your 1099 miscellaneous, and your 1099K. And that's if you obtain or accepted credit card transaction within your business. Okay, so those are the three forms you would be waiting for if it's something that you've engaged in services with. Now, of course, it could be the case that you accepted payment through Cash App, Zelle, or PayPal. You still want to go ahead and gather all those income, right? So again, the income is the easy part, because you just need to gather all of those up. Next is the expense. The expense is where we begin to think, well, is this a write-off? How do I know if this is a write-off? Don't worry. I am here to answer all those questions. Again, if you have any questions, drop them in the comment section. If it's too intimate, go ahead and send me a personal message. I'll certainly respond to that. So when we look at expenses for a self-employed individual, you want to take into consideration your office supplies. So office expense. Hey, you had to buy a computer, or you're taking videos, you had to buy the little camera thing, anything that will enhance your business as it pertains to office, you want to go ahead and capture those. So even if you had to buy printer, ink, pen, all of those things, we cannot leave anything on the table, okay? So once we've looked at that, you've gathered all your office expense, then you want to look at your home office deduction. Now, with the pandemic, a lot of business owners had to take their business home with them. And that could mean you cleared out an entire room, or you just sat over there in the corner and did your business stuff. Whatever it may be, you're still entitled to be able to write off a portion of that space on your taxes. So you're able to take advantage of that, right? But first, here's what you need to do. You need to know what the square footage of the space that you're using for your home is. So whatever that space is, if it's in the corner, if it's a room, you need to know what that square footage is. Now, as it pertains to the entire home, you also need that square footage. So you have two parts of this. What is the square footage of the space that you're using for your home? And then what about the entire home? You need both of those to calculate this particular home office deduction. And then once you've gotten all of that, leave it to me. I'll take care of the rest. and then you'll be able to get your deduction. However, because we want to reach for the one that gives you the maximum amount of benefit, what I will also recommend that you do is jot down what your rent payments were or your mortgage interest and also your utilities. And again, this is for the home office deduction. It can play a part in what you're able to write off on your taxes and reduce your tax liability or increase your refund. That's a great thing. All right, so the next part is, let's say within that same space that you're working, you had to kind of put some paint on the wall or fix something up within that space. That's referred to as repair and maintenance. That is also a write-off. So if you needed to fix up a certain area, put backdrop or something like that, certainly it is all a write-off because it's for the business, okay? So keep that in mind. All right, so last, of course, if you had a phone that you're using for business, same thing here. What is the percentage of time that you're using your phone? A portion of that is a write-off. And then, of course, if you had someone, and I know this happened with a lot of people, they may have had their sibling, their parent, their child helping them with business, no problem at all. The payments that you've made to them could possibly be a write-off. However, you have to play by the rules if you do want to take this write-off. So if you've paid that individual over $600, you do have to file what is called Form 1099 with the IRS and ensure that that individual obtained their copy in order to write it off as an expense. Again, if you paid someone to help you with a project that you were working on. However, if it was below $600, you don't have to worry about writing that 1099. However, if you do want to write off those payments and you don't write that 1099, you cannot write it off, okay? Because if you're not reporting it to the IRS, that's basically saying that you pay them off the books. And if you're paying someone off the books, it's not a write-off. So keep that in mind as well. All right, so now that we've talked about preparing, right? How can you achieve organization with all of this? So what I would first recommend is to create a system that works for you, a system that is viable, not just for now, but for future purposes, a system where maybe I can take a look at it and it's like, oh, okay, this makes sense, right? And that system could look like you using, say, Microsoft Excel or Google Sheets. Either one to basically itemize all those income that we've pulled, right? All those expenses, itemize all of them. Well, this was for meals, this was for repair and maintenance, whatever it may be. And again, for all my Uber and Lyft drivers, it's COVID, so you may have had to buy a lot of PPEs, right? All of those things are write-off. Do not leave anything on the table. All right, so here's the thing. While you have say Google Sheets or Microsoft Excel to use, you can also use a online accounting software if it gets a little bit too much for you to handle all that manual work, because with the software you're then able to automate a lot of what you do, okay? And if you need assistance with either one of those, certainly reach out to us at info@brownsfca.com, and whether it's the Excel or an online accounting software, we can certainly walk you through or help you decide which is best for you, okay? All right, so next is, after you've organized, how can you stay compliant? Because the idea is whatever you're writing off, you need to be able to prove it. And when you're proving it, that means you're remaining compliant, right? We have to play by the rules. Though we can be creative, we still have to play by the rules. And that means we have to remain compliant. And compliance looks like documentation. You have to document everything that has been going on in your business. Anything that comes in, anything that goes out, document it. Nothing should leave without a trace. Okay, and that documentation saves you time and money. Maybe you don't see it now, but eventually it will, because at the end of the day, documentation is your weapon in a legal battle. Okay, so you want to make sure that you keep all of those things documented. And of course, it is recommended that you do that electronically, because, for example, if you have a cash receipt, the ink on that can wear out over time. Whereas if you make sure you capture a copy of that, you can have that for a very long time, right? Okay, so with that documentation, it will help you to remain as organized as possible. And another thing to add there is when you have that system in place, you want to stick to it so that you can continue to remain organized, and you're not worried about, well, what's going on over here. It will give you a peace of mind. And don't we all want that? Absolutely. Okay. So now that we've talked about all of that, I do want to bring up the element of surprise that usually hits self-employed individuals pretty hard. And that's called self-employment taxes. And self-employment taxes are your Social Security and Medicare taxes. Think about it. If you were a regular employee on payroll, you would have been paying taxes throughout the year, right? Every time you get paid, they're taking taxes out. Whereas if you're self-employed, you're receiving all those funds up front. No taxes are coming out. You're just receiving it. So you go throughout the year, no taxes come out. And when you file your taxes, whoop, then comes the surprise. So that's what I want us to be aware of. And that's why it's encouraged to make estimated tax payments throughout the year so that when year end comes, you're not hit with this huge surprise, because self-employment taxes can be pretty hefty. It's actually 15.3% of your net profit. And your net profit looks like this. For example, let's say you brought in total revenue of $100,000. Your expenses were, say, $60,000. You now have a net profit of $40,000. Now, 15.3% of that will be assessed to you in taxes. So do the math. And then on that same $40,000, once any other deductions and credits have been applied to it, you'll also have to pay ordinary income taxes on that. And that's why some people call it double taxation in that regard, but really you're paying your employment taxes and also your ordinary regular income taxes. Okay, so you want to keep that in mind. And if you are a small business owner, LLC, you want to rethink your entity so that you can avoid paying such a high amount in self-employment taxes. Okay. And then moving forward, to avoid owing a large sum of taxes, what I would recommend is utilizing the 70 to 30% rule of thumb, okay? So what that means is 70% comes home with you and 30% gets paid into taxes. So for example, you made $1,000, 70% comes home with you, 30% gets paid into taxes. But also you want to go ahead and keep in consideration any expenses that you may incur during that time period of that revenue. Okay, so that was a lot of things that I covered. So let's do a quick review. If you are a Uber driver, independent contractor, Lyft driver, freelancer, small business owner, you need to ensure that you are prepared for this tax season. It's one that a lot of sneaky things has taken place, in the sense that we may not have experienced it in the past. Okay, and you have to know that if you are any one of these individuals that I just mentioned, even an LLC, you want to ensure that your Schedule C, which is the business portion of your taxes, is filed with your personal. I've already started seeing individuals not filing their Schedule C's with their 1040, then they come back saying, well, Rose, or I did not file my taxes right. Obviously they filed it on their own, but now they're saying, well, I missed filing my business portion. So that's when they come to me and say, hey, I need to amend my taxes. And again, it could be costly down the road because you failed to report it when it was supposed to be reported. So you want to go ahead, grab all your income, all your expenses, use either a spreadsheet or a software to itemize all of those things that you've received throughout the year. Of course, you want to sum that up. And then in regards to staying compliant, you want to document everything, because documentation is key. And moving forward, you certainly want to avoid these self-employment taxes by looking at the 70 to 30% rule of thumb, where 70% of income comes home with you and 30% gets paid into taxes. And then moving forward, you still want to have a system in place to kind of keep you balanced and keep you going as you're being a self-employed individual, right? So I will be sticking around for the next couple of minutes if there are any questions. And in the meantime, I'll just go over a couple of announcements. So tax season is well underway. Okay, we don't want to wait, but we absolutely do not want to rush, because rushing is what causes amending, and amending costs money. Okay, so you want to make sure that you have a plan in place, and a plan could look like you pull in our tax checklist from our website. Again, that's www.brownsfca.com. We have an individual and a business tax checklist. These will certainly help you, again, get your tax affairs in order. So head on over there and pull those. And if you have any questions in the meantime, again, send me a message. You can message me through our website, whichever works best for you. But we're here to respond to your inquiries, okay? And don't forget, I am here every Tuesday at 7 p.m. breaking down a new tax topic. And trust me, this is great information for those who don't know. So whether or not it's directly impacting you, I would encourage you to to share and comment, and send it to someone. Even if it may not directly impact you or someone in your circle, I'm sure there's someone near your circle who could certainly use this particular information, okay? And again, my team and I, we are allowing or giving the opportunity to those who come through to us through our Tax Tip Tuesday video, a 10% discount on their preparation fee. And if you're a returning client, don't worry, we still have our incentive system in place where you too can take advantage of that. So really, on a 360 turn, we're all being rewarded, okay? And I don't see any questions. So I will see you all next week at 7 p.m. And again, like, share, comment. If you need to follow us on social media platform, both myself and the company share a lot of great content. So again, that's at brownsfca.com. Actually, yes, and for myself at The Accountant Therapist. And again, any questions, go ahead and comment. I know this is a lot to swallow, so certainly if we need to jump on a free 15-minute consultation call, we can certainly do so, okay? Thank you so much, Pastor. Again, see you next week. Stay safe and have a pleasant week. Thank you all, and bye for now.